Good afternoon, everyone. I am CA Ribhavgia, moderator of this webinar. We are delighted to welcome you all in the webinar being organized by Continuing Professional Education Committee of ICAI. It is my pleasure to be the moderator for 55th webinar on IND 8 and tax audit, clauses 19, 24, 30A, 30B. In a short while, we'll start the webinar. First, I would like to apprise you about the CPE committee. The profession of chartered accountancy is growing leaps and bounds, and it is phenomenal growth has brought the profession at the forefront. Today, our profession has acquired an indispensable position in the business and economy. ICI continuously aims at developing knowledge edge so the members stand out to the expectation of the society. To achieve this objective, the CPE committee of ICI has been continuously striving for perfection, integrity, and knowledge, which make the word chartered accountant synonymous with excellence in service. In this direction, CPE committee has always been proactive to the emerging needs of its members, enabling them to acquire contemporary knowledge and skills to face the challenges effectively by organizing CPE programs and providing adequate opportunities. The program for this evening is as follows. We have two sessions of 1 hour each. India's 8 and tax audit. Our eminent speakers will talk about the above mentioned two emerging areas of professional interest. Uh, we like to welcome our Vice Chairman of the CPE Committee, CA Vishnu Kumar Agarwal ji. But firstly, I would like to tell about the Vishnu ji. CA Vishnu Kumar ji is a Central Council member of ICI for the term 2025 to 2029. He currently serves as the Vice Chairman of the CPE Committee and the Direct Tax Committee of ICI. Additionally, he is an esteemed member of several other key committees of ICI. With over 2 decades of experience, he specializes in income tax matters and also authored the landmark book Judgments of Income Tax. Sir, now I would like to invite CA Vishnu Agarwal ji to start his deliberation. Sir, please.
Very good, very good afternoon to one and all. Our respected speaker, Sri C.S. Amit Samaria ji and C.S. Amar Sangam Agrawal ji, Amit ji from Jaipur and Sangam ji from Gurgaon, and our today's moderator Rishabh Bhia ji from Jaipur, and our honorable chairman of the CP committee, C.S. Satish Gupta ji in his absentia. Friends, I welcome all my delegates to this 55th webinar of the CP committee. Friends, from last so many days, we are the series for the Indies and the tax audit clauses. Today we will discuss the Indies 8 and the tax audit clause 19, 24, 30A and 30B. Friends, for the benefit of all the members, because our tax audit is going on and our members are facing so many problems. So we as the CP committee have thought that why not we do the series of the program on the tax audit and the Indies. So we are organizing this program and our so many members have taken the benefit of the each and every program of the Indies and the tax audit clauses. Friends, from I'm also vice chairman of the direct tax committee, and under the direct tax committee, first time with the history of the ICI, we have printed the Income Tax Act 2025 in only it is available on the publication counter at only the 500 rupees, including the shipping cost charges. Friends, we have thought that so many publication house in India, they are selling the 2000 rupees and 2500 rupees, the Income Tax Act 2025. And this is the first act after the Finance Bill 2025. So we have thought that why our Direct Tax Committee has not print this Income Tax Act 2025. Friends, so many members has taken the benefit of the Income Tax Act 2025. I request each one of you take the maximum benefit because this is the very on the only the cost to cost price we have printed and selling from the ICI. Friends, at the same time, we have revised our tax audit guidance note 44AB. So I request each one of you, this is also hosted on our website. Please take the maximum benefit because tax audit is going on. All the ITR forms 1278, it is hosted on the website. So to take the again maximum benefit of the ITR forms, friends, we have taken the so many initiative on the CP committee as well director in the financial tax literacy. There also we have done so many programs under the leadership of our honorable president Sri Charanjit Singh Nandaji. Friends, now I will talk not take much of the time because Amit ji will discuss on the India's 8 and Sangam ji will discuss on the tax audit close. So I thought that my members take maximum benefit and I will not stand between you and the speaker. So now I request our moderator, Mr. Biaji, to introduce our speaker. And before this, आप सभी को दीपावली की बहुत बहुत शुभकामनाएं, धनतेरस की बहुत शुभकामनाएं, नया साल अपने सबके लिए बहुत मंगलमय होवे, सब चार्टर्ड अकाउंटेंट, सभी मेरे ब्रदर्स सिस्टर्स बहुत प्रोग्रेस करें, बहुत प्रगति करें, यही मेरी शुभकामनाएं हैं. थैंक यू फ्रेंड्स.
Thank you, sir.
Thank you.
Thank you, sir, for your welcome address. Without taking any more time, I would like to introduce our speaker for the first session, C.A. Amit Samaria ji. C.A. Amit Samaria ji has experience of more than 18 years in the field of finance, taxation, and auditing. He is a passionate educator and a thought leader who has mentored more than lakhs of students across India. He has authored India's first written handbook on Ind AS financial reporting for CA Final and has been recognized with multiple rewards, including the Young Achiever Awards for excellence in professional and academic domains. Beyond his professional pursuits, he is actively contributes to the social causes through the Shaping World Foundation, promoting education and community development. He has delivered multiple sessions as a guest speaker at various national and regional conferences, seminars, and webinars. Sir, now I would like to invite C. Amit sir to start his session.
Hello, all of you, and a very good afternoon to all of you. And first of all, thanking all of you to invite me on this respectable platform. Thank you. मुझे सबके नाम पता नहीं है. Ribav, thank you Vishnu sir, thank you Agarwal sir, Gini Goyal ma'am, thank you very much for inviting me, and especially special thanks from my side and very regards and pranam to respected Satish Gupta sir. Okay guys, all my dear friends, आज का हमारा जो सेशन है दैट इज ऑल अबाउट इंड एस 8 एप्लीकेबिलिटी एंड हाउ टू अप्लाई इंड एस 8 इन फाइनेंशियल रिपोर्टिंग एस्पेक्ट्स. सो all are ready to take the session on this very interesting Ind AS 8. Let us start this. So first of all, what is Ind AS 8? The heading is accounting policies, accounting estimates, and errors. So basically this accounting standard deals with three topics: accounting policies, accounting estimates, and errors. Now, how to select an accounting policy, how to apply an accounting policy, and what are the impact of changes in accounting policy. So as far as accounting policy is concerned, this index deals with three areas: selection of accounting policy, application of accounting policy, and the impact of changes in accounting policy. And this index clearly mentioned that change in accounting policy is accounted for as by retrospective effect. So we should get very clear in the inception that we should be very clear that change in accounting policy is all about a retrospective adjustments in financial statements. What about change in accounting estimates? The Ind AS 8 clearly mentioned that the changes in accounting estimates will have prospective change, prospective impact on financial statements. And what about errors? It is also errors which are committed in current year and which are also located in current year. This index is not applicable on that. Exactly, this Ind AS 8 is applicable on those errors which are committed in previous years, preceding year or years. but are located in current year and that are rectified in the current year as per Ind AS 8, and that rectification is also a retrospective effect. So it is very, very clear the three headings of this Ind AS, that is accounting policies, accounting estimates, and accounting errors. And the impact given by Ind AS 8 is a retrospective effect for changes in accounting policy, prospective effect for accounting estimates, and retrospective effect for rectification of errors. And we should be very clear at the beginning that this standard deals with selection and application of accounting policy as well as accounting policy as well as change in accounting policy. That's it. Now, the first question arises, sir, what is accounting policy? Accounting policies, what are accounting policies? There are a lot of examples. हमें कई सारे examples पता होते हैं. ये change in accounting policy, this is a change in accounting policy. We are a little bit confused regarding that. So what exactly the Ind AS Act specify? What is an accounting policy? Accounting policies are specific principles, measurements, concepts and conventions, rules and practices, the five important terms in the definition of accounting policy, that is specific principles, measurement basis, concept and conventions, rules and practices which are applied. These rules etc are applied in preparation and presentation of financial statement. So any rule, any specific principle, any measurement criteria which we are using in preparation, while we are applying in preparation and presentation of financial statement is an accounting policy. So first of all, it is necessary to know that what is preparation and presentation of financial statement. We should be very clear about this. Whenever you are recognizing anything, it's a preparation of financial statement. It's a part of preparation of financial statement. Whenever we are measuring any item, it is a part of preparation of financial statement. When we recognize something and measure something, and after that we disclose such recognition and measurement items in balance sheet, it's a part of presentation. It's not disclosure, it's a presentation. So accounting policy deals with recognition as well as measurement as well as presentation, not the disclosure requirement. Accounting policies are disclosed, but in disclosure part, accounting policies definition represents only to preparation and presentation of financial statement. All the rules, all the principles, all the measurement bases, any specific principles, any practices which we are applying while preparation and presentation of financial statement is an accounting policy. Now, we should be very clear regarding this. बहुत easily हमें ये बात समझ में आती है कि यार accounting policy तो matter of choice है. ये भी use कर सकते हैं, वो भी कर सकते हैं, वो भी कर सकते हैं, ये भी कर सकते हैं. We should apply. There is a choice. ठीक है. What is a choice? Choice जहां भी choice होती है वो अकाउंटिंग पॉलिसी है. हालांकि देयर आर एक्सेप्शंस. इट इज नॉट ऑलवेज नेसेसरी कि अकाउंटिंग पॉलिसी मींस अ चॉइस. फॉर एग्जांपल, स्पेसिफिक प्रिंसिपल, we are measuring inventory at its cost or NRV, whichever is lower as per Ind AS 2. So there is no choice. You have to measure inventory at cost or NRV. You can measure cost by various methods. Yeah, there is choice. You can measure NRV by applying rules. There may be choice, but you should definitely take whichever is lower. There is not a choice, and that is also an accounting policy. So in the maximum cases, while selecting accounting policy denotes for choice. There may be a recognition choice. At the time of recognition, we have a choice. For example, Ind AS 116 give exception to short-term lease and low-value lease, that you can treat such short-term lease as an operating lease. It's a choice. But there is an exception. It is possible that we cannot apply. We want to apply 16, and if Ind AS 116, and if we apply on short-term lease or low-value lease Ind AS 116, then it is not. Then we have to follow treat it as a finance lease. हमें उसे फाइनेंस लीज मानना पड़ेगा. तो रिकॉग्निशन के टाइम पर ही हमारे पास चॉइस है कि शॉर्ट टर्म लीज और लो वैल्यू लीज के लिए हम रिकॉग्नाइज कैसे करें, इधर विद अप्लाइंग Ind AS 116 और विदाउट अप्लाइंग Ind AS 116, either treated as a finance lease or operating lease. This is called a recognition choice, and that is why this is an accounting policy which we are going to apply for lease accounting. That is why there is another choice called measurement choice. What exactly? All people think that is exactly measurement choice. Definitely, For example, we are recognizing a property, plant, and equipment as per Index 16 initially at cost, and definitely now at the balance sheet date, we want to choose a revaluation model. Definitely, it's a measurement choice. It's a measurement choice. We are switching over to cost model and we are changing its value to revaluation model. It's a measurement choice. So changing cost model to revaluation model or revaluation model is a change in accounting policy. Where there is a choice, there is a it is a case of accounting policy generally. हालांकि मैंने आपको एक एग्जांपल बताया कि अकाउंटिंग पॉलिसी मैक्सिमम टाइम पर चॉइस होती है, जहां चॉइस होती है वो अकाउंटिंग पॉलिसी है, लेकिन cost or NRV whichever is lower, it's a specific principle. Whenever there is a specific principle, there is no choice. And we can also take one example for presentation choice. Choice, accounting policy is a matter of choice. There may be a choice at the time of recognition of any item. Choice may be at the time of measurement, and no choice may be at the time of presentation. Let us take a very clear-cut example, very easy example for this. Say we receive any entity received a government grant. Now there are two approaches under Ind AS given. That is, you can treat government grant as a deferred income, or that's an income approach, and otherwise you can treat government grant as a reduction from cost of asset (PP). That is called capital approach. It is you. It is up to you whether you follow income approach, capital approach. It's a choice at the time of presentation in balance sheet. If you can you can treat it as a deferred income, you can treat is a government grant as a reduction. So it's a choice. So accounting policies are those specific principles, measurement base, concepts, conventions, and rules, etc., which are applied by an entity for preparation and presentation of financial statement. And it's a matter of choice. Choice maybe at the time of recognition, maybe at the time of measurement, maybe at the time of presentation. So now the next question arises that can you change an accounting policy? Yeah, definitely yes, 100% जी. परिवर्तन ही संसार का नियम है भाई, भगवान कह गए हैं, तो why ऐसी तो कोई बात ही नहीं जो चेंज नहीं होगी. Accounting policy, yes, definitely can be changed. Then when it can be changed? What are the circumstances? It can be changed. Definitely, there is a paragraph, a very that is called very important paragraph under Ind AS that is para 14. Para 14 deals with two situations, that is clause A and clause B. So in clause A, there is a mandatory change, means you have to change. There is no choice. You have to change the policy, a mandatory change, and otherwise the second case is a voluntary change. 14A is a mandatory change. Yes, you can change an accounting policy, definitely. But when? When you can change an accounting policy? When an accounting policy can be changed is a matter of paragraph 14A as well as paragraph 14B of Ind AS 8. So, friends, let us, it's a very important analysis about 14A and 14B. 14A deals with this is mandatory change. For example, I have a lease transaction, and earlier I am applying Ind AS 17. Ind AS 17 on accounting is set at 19. Earlier I am applying this. Now, so for, it's not a short-term lease, it's not a low-value lease, it's a general other lease on which Ind AS 116 is applicable. Now I am applying earlier Ind AS 17. Now there is applicability on me on Ind AS 116. So definitely earlier what I am applying in Ind AS 17 and now what I have to do in Ind AS 116. It's a change. It's a mandatory change. I have to change this. I have to change. I have to switch this from Ind AS 17 to Ind AS 116. So it's a mandatory change. What is mentioned in paragraph 14A? You can change an accounting policy. You can change an accounting policy when it is required by Ind AS. So what about this is all about 14A. And for example, another 14B is the case. It's a voluntary change. Now suppose for example, voluntary change like this ki, particular accounting policy is used by an entity and the entity wants to change that only due to because the competitors are adopting some accounting policy and the entity thought that that competitors accounting policy showed a better performance, better presentation to the financial statements. That's why, for example, I am having an investment and I am measuring investment at cost. But my competitor entity applying another index and it has option and they are valuing the investment at fair value. Fair value, and now I want to move it my cost presented investment to fair value investments. So it's a change, it's a voluntary change, it's not required by any Ind AS. So Ind AS 8 deals with two types of changes, two types of changes in accounting policy. At two times, you can change it mandatory, 14A, and you can change it voluntarily. So it should be very, very important discussion. Now, remember this, when 14A is applicable, remember this, means I'm shifting to index 17 to, for example, index 116. तो जब भी आप इंडेक्स से शिफ्ट होते हैं तो जो नया इंडेक्स होता है उसमें ट्रांजिशनल प्रोविजन होते हैं, देयर आर ट्रांजिशनल प्रोविजंस. Then if a new index is having transitional provision, it is also a change in accounting policy, but that change applies prospectively. A very, very important discussion. Earlier I have mentioned at the beginning that इंडेक्स 8 में जब भी अकाउंटिंग पॉलिसी का चेंज होगा, whenever there is change in accounting policy, फाइनेंशियल स्टेटमेंट्स में जो इंपैक्ट आता है रेट्रोस्पेक्टिव इंपैक्ट आता है. So, a retrospective impact is created for change in accounting policy, but it is only when Index 8 is applicable. There is an exception to this rule. Earlier, I said that when there is change in accounting estimate, it is accounted for prospectively. Now, I am discussing regarding an exceptional case. When there is change in accounting policy and the impact is not given retrospectively in financial statement, it is given prospectively. Yes, if I am shifting my lease transaction from index 70 to index 116, it's a mandatory change. It's a paragraph 14A applicability. Now, if 14A is applicable, another paragraph in index 8, that is 19A. And 19A clearly deals that if there is an initial application of any standard, in this case, index 116 is initially applied mandatorily, and definitely it covers it contains a transitional provision. So this is a change in accounting policy because index 17 contains another policy for leases. Index 116 there is a different policy for leases. Change in accounting policy, but its change is accounted for as prospective. Why? Because especially transitional provision is given under index 116. Now what if transitional provision not given? And what happens if there is a change in accounting policy, is a voluntary change? Then what happens? Yes, definitely. If the change in any accounting policy is voluntary change is mandatory, but the respective index does not come a transitional provision, then definitely change in accounting policy is accounted for by a retrospective effect following index 8. So remember, my friends, index 8 is not always applicable on changes in accounting policy. It is applicable on changes in accounting policy which has retrospective effect, and it is applicable only when there is a voluntary change. And if there is a mandatory change, then it is applicable only if it is not, if the relevant index on which we are shifting is does not contain any provision of this transitional provision. Yes, definitely. At the time of changes from index 17, say from index 116 to index 116, and there is a transitional provision in index 116. So change in accounting policy is accounted for as a prospective change, So it's a very, very relevant paragraph. 14, if 14A is applicable, then apply paragraph 19A. If 14A is not applicable, then apply 19B. 14A is applicable, then apply 19A. 14A is not applicable, then apply para 19B. And if 14 is applicable, then always apply para 19B. This paragraph 14 and paragraph 19 are very interrelated to each other. Remember, friends, what is 14A? Change in accounting policy due to mandatory change required by Ind AS. 14A is applicable, but that new Ind AS on which we are shifting does contain a transitional provision. Yes, then 19A is applicable, and you should change. It should be accounted for prospective effect, not retrospectively. And in all other cases, when there is a mandatory change, 14A applicable, but in this 19A is saying that transitional provision is not there, so you should give it the retrospective effect accordingly. And if 14B is applicable, definitely, friends, we should apply 19B, that is a retrospective change. So it's a very, very interesting discussion. Now, there are specific areas. So till far we discussed that what is accounting policy, what aspects covered in this, what is accounting policy, and how can an accounting policy can be changed, and how when it can be changed, or not. Yes, it can be changed, and when it can be changed. Paragraph 14, and what is the treatment as per paragraph 19. And you should definitely remember friends कि अकाउंटिंग पॉलिसी इज अ मैटर ऑफ चॉइस. जब भी हमारे पास चॉइस होती है 99% केसेस में जहां जहां चॉइसेस होती है वही अकाउंटिंग पॉलिसी है. और हम उस चॉइस में से किसी एक को सिलेक्ट करते हैं, ये एक से दूसरे पर जाते हैं, सिलेक्ट करते हैं, दैट इज सिलेक्शन एंड एप्लीकेशन. एंड देन हम जो उसे चेंज करेंगे, स्विच करेंगे उस चॉइस के साथ, दैट इज कॉल्ड चेंजेस इन अकाउंटिंग पॉलिसी. सो स्टूडेंट्स, hello. So, friends, definitely we should concern about the changes in accounting policy. Now, a very very important discussion. There are certain things, certain cases जो हमें लगता है कि अकाउंटिंग पॉलिसी का चेंज है, लेकिन it is not a change in accounting policy. Yes, there are situations which are discussed in India's that certain things, certain situations, certain conditions, we feel that हमें लगता है कि वो है, हमें लगता है वो है, लेकिन वो नहीं है. मतलब वो का मतलब अकाउंटिंग पॉलिसी का चेंज नहीं है. फॉर एग्जाम्पल, very very interesting example and very interesting case which I saw in very practical cases. Change in substance, चेंज इन सब्सटेंस ऑफ एनी ट्रांजेक्शन. अगर किसी ट्रांजेक्शन के सब्सटेंस में चेंज होता है, सब्सटेंशियल चेंज होता है, तो वो अकाउंटिंग पॉलिसी का चेंज दिखता है. इट सीम्स लाइक चेंज इन अकाउंटिंग पॉलिसी. इट इज नॉट अकाउंटिंग पॉलिसी. It is not change in accounting policy. It seems like change in accounting policy. It is not change in accounting policy. What is this case? It's a very, very interesting case, my dear friends. It is very interesting case. Say for example, we take a very, very common example and very interesting example on this. For example, I have a building as a property plant and equipment, which I am using it in my business, that it was classified as property plant and equipment as per Ind AS 16. Any other asset which is classified as intangibles under Ind AS 30A. For example, let us take only building example. Let us take Ind AS 16 only for PPE. Now the building, I want that, मुझे लगता है एकदम से मेरे दिल में ख्याल आता है कि नहीं यार, इस बिल्डिंग को यूज नहीं करेंगे, अब इसे सिर्फ कैपिटल एप्रिसिएशन के लिए रखेंगे और या इन्वेस्टमेंट इनकम अर्निंग के लिए रखेंगे, रेंटल इनकम के लिए. ओह, व्हाट हैपेंस, क्या हुआ, ये क्या हो गया? परिवर्तन ही संसार का नियम है, पर इतना बड़ा परिवर्तन, सब्सटेंशियल परिवर्तन, substantial change. Yes, earlier it was PP, but now building which you kept for capital appreciation, not for use and for rental, it is investment property. अरे भाई, ये क्या हुआ? ये तो धर्म परिवर्तन ही हो गया. कभी लगता था Ind AS 16 और अब लगता है Ind AS 40. Oh my God, Ind AS 16, Ind AS 40, Ind AS ही चेंज हो गया, Ind AS का ही चेंज होना. ठीक है. in the cases of lease, in the case of lease, it's not a change in Ind AS. Actually, Ind AS 17 was abolished and a new Ind AS applicable. Oh, there are two existing Ind AS: Ind AS 16 on PPE, Ind AS 40 on property, Ind AS 40 on investment property. Now, the building which was earlier used in the business is classified as per PPE under Ind AS 16. And there is an option in Ind AS 16. We measure it at cost, and at the subsequent date, we can choose any model, or cost model or evaluation model. Now the building is kept for rental purpose or for capital appreciation. Now what happens? Oh my God, I have to compulsory follow Ind AS 40, and Ind AS 40 deals only with cost model. Yes, it's earlier supposed in Ind AS 16 that building was under revaluation model, and now I'm switching that Ind AS is change. It's a substantial change. उसकी तो जाति, उसका धर्म ही बदल गया. It's a substantial change. Now it is an investment property. Now I have to measure it at cost. Now revaluation model to cost model. Yes, it's a change in accounting policy. It seems like change in accounting policy because revaluation model to cost model. It's an accounting policy. It's a change in accounting policy. It seems like change in accounting policy, but in this particular case, my dear friends, my dear colleagues, in this particular case, it's not a change in accounting policy because there are certain exceptions under Ind AS 8 that if there is a substance, if there is substance change in any transactions in nature or event, substantial change, so it is not treated as change in accounting policy. Yes, if there is a plant and machinery, Ind AS 16 applicable, we are measuring it at cost. Now we want to switch over to revaluation, or we are measuring it at revaluation, we are switching over to cost. Yes, it's a change in accounting policy. Ind AS 16. We are in Ind AS 16. Again, presently we are in Ind AS 16. There is no substantial change. Just we are changing cost to revaluation to cost. But Ind AS 16, earlier applicable, now the building is used for as an investment property. Ind AS change, Ind AS 16 to Ind AS 40. Now earlier revaluation, now cost. This is a change in accounting. It seems to be a change in accounting policy, but it is not a change in accounting policy as it is covered under the exception given in Ind AS 8. It is treated as a change in substance. उसकी ओरिजिनलिटी ही चेंज हो गई, तो ये अकाउंटिंग पॉलिसी का चेंज नहीं है. इट्स नॉट अ चेंज इन अकाउंटिंग पॉलिसी. एंड अनदर एक्सेप्शन, there may be certain items. For example, I am dealing in manufacturing this remotes. I am dealing in manufacturing these remotes, and I have a certain accounting policy for this. Now a very big customer, a very branded customer approaches to me and tell Mr. Samaria, Mr. Amit ji, please make this for me. But it should be very customized according to my specifications. You should follow my instructions. Oh, there is different risk, different return. So I should make a different accounting policy for this. Earlier, I am using X accounting policy for this a simple remote, but a customized remote I have to manufacture. And now I have it's a entirely different product for me. It's first time मेरी जिंदगी में पहली बार हुआ है. ये पहली बार हुआ है. हाँ, तो पहली बार इस तरह का मैंने प्रोडक्ट दिया है, तो इसके लिए मैं एक सेपरेट अकाउंटिंग पॉलिसी कुछ यूज करना चाहता हूँ. फॉर एग्जाम्पल, तो इट्स नॉट चेंज, इट्स अ न्यू फर्स्ट टाइम. चेंज तो तब होगा ना कि पहले कुछ और मैं नया कर रहा हूं. ये तो पहली बार ही मेरी जिंदगी में हुआ है. पहला बिल्कुल. हाँ जी, क्या ये मेरा पहला प्यार है? बिल्कुल. ये तो पहली बार. ये इट्स अ कस्टमाइज्ड remote product. So it is not a change. So what Ind AS 8 deals, that Ind AS 8 says there are certain situations which seems like changes, but changes in accounting policy. Yes, definitely, friends, but it is not a change in accounting policy. For example, earlier we have taken an example, the substance change. It is not, it seems like change, but it is not a change. And secondly, earlier there is no accounting policy, and certainly a new policy is established. Earlier we are not providing for any gratuity provision, and now we are providing for gratuity provision. Earlier there was no policy, so we can't say that it is a change. Yes, it is a new policy. So whenever there is a new policy, it cannot be treated as earlier there was no, it's a policy, so it's a change. No, it seems like change. It is not a change. It is not a change. And another exception is there, a very critical exception. Earlier there were certain items. For which there is no accounting policy. In the remote example case, earlier there was no customized remote. This entirely new product. What I'm telling is that earlier there was an item, say an item of scrap. And since it was scrap, it was immaterial to me, and that is why there was no specific accounting policy regarding to that scrap. Now, friends, now certainly situations change and that scrap become material. So I have to make a accounting policy for that scrap since it is material. So it is not a change in accounting policy. It is not, it seems like change, but it is not a change in accounting policy. And definitely, if it is change in accounting policy as per Ind AS 8, then we have to do retrospective adjustment. But since I am discussing exception here, so it is not a change in accounting policy. So we will give effect prospectively. It's a very clear, very interesting, and you should be kept in mind like this. If a change is a substance, it seems like change in policy, but it is not a policy. If there was nothing entirely new, and for that entirely new, we are making a policy. It is not a change; it's a new policy. And the third case, exceptional case, is there was something which was immaterial, but now becomes material. There was no policy, now there is a policy. It's not a change. It seems like change, but it is not a change in accounting policy. And definitely, friends, trust me, this is the case when there is seems like changes in accounting policy, but it is not a change in accounting policy, and that is why it deals prospectively. Friends, it is very clear that we all should remember this, that whenever there is changes in accounting policy and Ind AS 8 is applicable, yes, there are cases when Ind AS 8 is not applicable. Ind AS चेंज हो गया, मैंने Ind AS 16 से Ind AS 40 पे गया, Ind AS कहाँ एप्लीकेबिलिटी नहीं आ रही थी. तो यस, यहाँ पर एक बड़ी इट्स अ वेरी इंपॉर्टेंट थिंग दैट वी शुड रिमेंबर दैट Ind AS 8 is applicable and there is change in accounting policy, on change in accounting policy, then the adjustments is retrospective. Yes, if Ind AS 8 is not Ind AS 8 not applicable on change in accounting policy, what are the cases? We have discussed. You are not remembering. Yes, there is a change in accounting policy and Ind AS 8 not applicable. Yes, there is a case when we shift, earlier we discussed that when we shifted from Ind AS 17 to Ind AS 116, lease transaction, and 116 contains a transitional provision. So we should have not apply in this is a change in accounting policy. We should not apply Ind AS 8 because there is a transitional provision in the respective Ind AS, so that respective Ind AS is inapplicable. So friends, this is very important analysis of this Ind AS. Now it's a yes. One thing is that earlier I said that if there is choice, there is accounting policy. But I mentioned one case when there is no choice, but it's an accounting policy, like inventory valuation, cost or NRV, whichever is lower. And remember, friends, there is also one case where it is a change. There is a choice, but it's not a change in policy. It's a change in estimate. And a very common and a very brilliant example for this is change in method of depreciation. We are shifting to SLM to WDV. We have choice. We have choice for WDV to SLM. We have choice. Yes, but it's the change in accounting estimates because depreciation method is based on the expected future benefits. Consumption pattern. What will be the consumption pattern of asset, tangible or intangible? What is the expected benefit from the use of that asset? And accordingly, we decide our depreciation method, that is SLM, that is production unit method, or WDV as per Ind AS 16. So definitely there is a choice. We can select SLM, we can select WDV, we can select production unit method. Yes, we have a choice, but this choice is regarding accounting estimates. So there are three cases you should remember. 99% cases when there is a choice, it's an accounting policy, and in that choice, when there is a change, it's a change in accounting policy. There is a one special case I have discussed here is that there is no choice. That is regarding inventory valuation. It's a specific principle, cost or NRV, whichever is lower. It's a specific principle. So we have no choice. So there is a case when there is no choice, but it's an accounting principle. There are maximum cases when there is choice. Those will be the accounting principles. And this is the one special case which I discussed that there is a choice. There is a choice, but it's not a change in accounting policy. It's a change in accounting estimate, a method of depreciation. So it is very clear to all of us that what I am trying to explain in this index. This index is a very conceptual, very practical. You should all know this. Definitely, all the regarding respectable members, you are all in practice from a long time, much more than senior than me also. So definitely you should know about the pros and cons of this policies accounting. So that's it. Now changing whenever there is a change in accounting estimates, it should be changes for definitely friends, always prospective changes. We does not want to change any previous comparative figures. Prospective change, just current year figures are changed. No impact on prospective comparative figures. But when there is a retrospective change in a particular accounting year, whether there is change in accounting policy, and अभी हम आगे डिस्कस करेंगे एरर्स रेक्टिफिकेशन, उसका भी रेट्रोस्पेक्टिव इफेक्ट होता है. तो definitely we will change our current year's financial statements, and definitely if there is retrospective changes, we will change in the comparative figure column also. This is the main point. Now the last discussion regarding this index, because this index deals with only three things: accounting policy, accounting estimate, and errors. Accounting policy में भी तीन चीजें, 3 points are covered in this index: selection of accounting policy, application of accounting policy, and the impact of change. What about regarding accounting estimates, or what is the impact of change in accounting estimates? And now we come to the error perspective. Errors, oh my god, unintentional mistake by an accountant. बचपन से सुनते आ रहे हैं यार, अब तो बोर हो गए. Unintentional mistake by an accountant. Yes, it's very simple, as simple as that. But if the error is committed in the current year and located in the current year, Ind AS 8 is not applicable. This just we have to rectify this Ind AS, and definitely we have to rectify these errors, and accordingly our financial statements are approved. But what about the errors जो गलतियां पास्ट में हो गई हैं, पिछले साल या सालों में, पिछले years में, those errors are committed in past, now located in current year. No friends, definitely आप सभी सहमत होंगे यार, इसको रेक्टिफाई करो यार, गलती तब सुधारें. अरे भाई, गलती तो जब पता चलती है तब सुधार लेनी चाहिए ना, यही संसार का नियम है. तो फिर सुधारो ना इसको. A very interesting fact regarding account, what is difference between accounting policy and errors. Friends, remember this. Accounting policy may be the policy at the time of recognition, maybe the policy at the time of measurement, maybe the policy at the time of presentation. Yes, all the rules, concepts, conventions, principles, and while preparation and presentation of FS. Preparation and presentation does not include disclosure. What do you mean by preparation of financial statement? Recognizing and measurement. And when this item presented in balance sheet, disclosed in balance sheet and financial statements, when a particular item which was earlier recognized, which was earlier measured, now we are presenting it in P&L or balance sheet financial statement, then it is that disclosure is called presentation. And exclusively disclosure by disclosure notes to accounts. Yes, friends, though errors, accounting policies are always related to recognition, measurement, and presentation. But errors may be in recognition, in measurement, in presentation, as well as disclosure. Yes, the accounting policy covers only three aspects, but error covered four aspects, all four aspects. There may be error in recognition, there may be error in measurement, there may be error in presentation, in financial statement, and there may be error in disclosure as well. So what to do? What to do? हमें करना क्या होगा errors को लेकर? Yes, we have to rectify it in the current year. But you know that errors are committed in the preceding year or years, located in the current year. We will rectify the current year figures, but definitely comparative figure will also change. Comparative figure will also change, means previous year column will be affected. No, definitely, whether it is of P&L, whether it is of balance sheet, it is affected. Oh, there arises a concept of a third balance sheet. There arises a concept in this 8 indirectly एक हिंट दे रहा है, हमें बोल रहा है कि बॉस थर्ड बैलेंस शीट नाम की भी कोई चीज होती है. व्हाट इज थर्ड बैलेंस शीट? What is first balance sheet? Oh, balance sheet at the end of the current reporting period is a first balance sheet. Now, what is second balance sheet? Oh, compare the preceding year. 31st, let us say current year is ending 31st March X5. So, current 31st March X5 balance sheet is the first balance sheet. Or definitely comparing Sean for 31st March X4. 31st March X4 is the second balance sheet which is presented, which is reported. Oh, yes, definitely, yes, definitely, yes. Or definitely, if there was anything, we have to correct our current balance sheet also, current P&L also, previous P&L also, previous balance sheet also. Definitely, if error is related to income or expenses, P&L is affected. If error is related to asset or liability, balance sheet will be affected. So, balance sheet P&L will be affected of the current year, will be affected, impact. Current, previous, preceding year balance sheet will be affected due to rectification. Oh, yes, it's called retrospective change. But definitely, if the previous year figures change, oh, there will be change in opening balance also. That at previous year closing balance will change only when there is change in opening balance also. So if current year is ending 31st March X5, first balance sheet is 31st March X5. Second balance sheet reported is 31st March X4 comparative balance sheet. And 31st March X4 balance sheet will be changed if the opening balance sheet as on 14x3, 14x3 will be changed. Yes, 14, if the 30 year current year ending is 31st March X5, so the third balance sheet which is presented in the report is 14x3. 14x3 is the opening balance sheet for x3, x4. And 31st March X4 balance sheet is the second balance sheet which is comparative for the current year. And the current year balance sheet as on is 31st March X5. So this is the concept of friends, third balance sheet. Third balance sheet, when the concept of third balance sheet is applicable, definitely earlier certain item was there that I am treating it as a current liability. Oh yes, very clear. There is a current year P&L, current year balance sheet, comparative balance sheet of preceding year. But the third balance sheet affected only when there is error in asset or liability. If there is any reclassification, any material reclassification, any material changes, if there is any material reclassification or material changes in asset or liability, then only the concept of third balance sheet will be triggered. Definitely, friends. For example, earlier certain liability which I was treating it as a current liability, now it becomes a non-current liability. oh my God, it's a disclosure error. It's a classification error. So I have to reclassify it. Now I have to reclassify it as a retrospective effect. So I have to change the current year impact and the comparative figures of previous year, as well as the third, since it is related to asset liability. So that is why third balance sheet is triggered. If there is change, if there is error in income and expenses, definitely current year PNL will change, previous comparative PNL will change, but there is no third PNL concept. Yes, friends. So what is all about Ind AS 8? In summary, Ind AS 8 is recognition. Ind AS 8 deals with selection and application and change in accounting policy, and that change is retrospectively always, except to certain cases when it is a prospective case, when this Ind AS is not applicable, but other Ind AS due to transitional provision etc are applicable. Number one. Number two, this Ind AS 8 deals with changes in accounting estimates. And friends, remember, it is always a prospective change. And the third, this Ind AS is applicable on rectification of those errors which are committed in preceding years but located in current years. And remember that the change is retrospective change. Retrospective change in rectification of error will trigger the concept of third balance sheet also. And friends, very, very important regarding changes in accounting policy. If there is a mandatory change, there is a voluntary change. If 14A is applicable, then 19A is applicable. And definitely, if 19A applicable, if there is transitional provision, then that relevant Ind AS apply. If 14A not applicable or 13B change in accounting policy, then retrospective effect is given for changes in accounting policy. So friends, this is all about Ind AS 8 accounting policies, accounting estimates. In not all about, it's just a summary. This is a very short duration. I have to complete this Ind AS. So Ind AS 8 is all about changes in accounting policy, accounting estimates, and errors. Thank you, friends. Thank you very much.
Thank you, sir. Thank you, Amit sir. Now, like there are some question answer. Let me check, sir. Can tech team support me with the question answer? I am not able to find the link.
Yeah. Let me know the questions.
So we have to wait for some time for the questions. I think.
Yes. Pardon?
Okay.
Oh, no questions? Oh,
No
little bit
questions.
clear. Oh, little bit. It's a crystal clear session. It's a doubtful situation. जब कुछ भी क्लैरिटी नहीं आती तो भी क्वेश्चंस नहीं आते हैं, और जब क्लैरिटी सारी होती है तो भी क्वेश्चंस नहीं आते. So should I leave the session if there is no questions? Rida?
Sir, we have to wait like for 5 to 3 minutes for if there are any questions.
Okay.
Okay, I think sir there are no questions. We can start. Okay, thank you, sir. Thank you for such an interesting session on Ind AS. Can we start the second session, sir, now?
Yeah, definitely. It's my pleasure. Thank you all of you for inviting me, and I will be always grateful to serve ICI on each and every platform as well as every time. Thank you, all of you. Bye bye. Thank you, sir. Sangam sir. Thank you, Ribha. Thank you, all of you. Bye bye. And again, my special thanks to Satish sir. Okay. Should I leave the session?
Yes.
Thank you.
Thank you, Amit sir. Now we would like to move on to the second session by CA Sangam Agarwal sir. First, I would like to give a brief introduction about CA Sangam sir. He is a chartered accountant with 15 years of experience in tax assessment, consultancy, finance, and business advisory. He is a fellow member of ICI who holds degrees in commerce, law, and diploma in ISA. He has served as secretary of NIRC ICA 2022 to 23, and is a regional council member of term 2022 to 29. He significantly contributed to ICI, leading multiple committees and organizing numerous professional events. A frequent speaker on taxation and ethics, he also heads professional forums and NGO, advocating for financing professionals. He actively participates in social and cultural organization and a great asset to the ICI. So today topic is of Sangam sir is tax audit clause 19, 24, 30A and 30B. Now I would like to invite CA Sangam sir to start his deliberations.
Thank you so much, brother. I also thanks to Ginni ma'am, Ginni Goyal ji, and Satish Gupta ji, chairman of the CP committee, and Vishnu Agarwal ji, vice chairman of the CP committee, and complete team of CP committee for providing me this opportunity to discuss this very important topic of tax audit, and especially these four clauses. And these four clauses are one of the very technical part in complete all 44 clauses. If you see all the 40 or 44 clauses, out of that, these four clauses are very important and very significant because income tax department are getting so much revenue from this kind of adjustment. And these four clauses are very technical for chartered accountant as well. Ki what to report, when to report, these things are very important. So friends, let's discuss in detail. I'm going to share my presentation.
So right now more than 280 people are watching this webinar.
Okay,
I would
okay.
like to congratulate all of us and
Thank
our
you,
members for watching this.
cadets go to CB committee for organizing this kind of important topic on time so that people can refresh their knowledge and use in professional endeavors basically. And before starting my deliberation, friends, I want to request all of you, please refer our guidance note of tax audit issued by ICI. Because friends, whenever you need any kind of guidance and any kind of doubt, that time guidance note is the best support to help you to get it done in a best possible manner. And later on, if any issue comes arises before income tax authority or any other authority, you can show the guidance note as a backup document. Okay, sir, I have rely on the guidance note. Based upon that, I have made this kind of disclosure and adjustment in tax audit report. So that will be best thing to conduct a tax audit. And our guidance note recently has been revised. So I request all of you to please refer our guidance note for detailed discussion about tax audit before because our complete team of ICI working day in day out for tax audit and give their contribution through guidance note basically. So moving to today's session, friends, as you know that today I have a four clause to discuss. First clause is clause 19, second 24, then 30A, 30B. These four clauses we discuss in detail. So friends, whenever you have any kind of question, you can write down in the chat box so that we can discuss that question also. I promise you all, I will not go anywhere until unless your all question has been answered. So moving to our topic number one, clause number 19. Clause number 19 of the 3CD, it's talk about basically critical reporting requirement for eligible business deduction under Income Tax Act. Friends, as we know that there are total four main section and many subsections basically, like section 32 AC, 32 AD, 33 AB, 33 ABA, and series of 35 section. As you can see in my screen, there are so many section are there. So friend, in this clause number, in this clause, we are in clause number 19, we are required to give two kind of amount debited to P&L and the admissible amount of deduction. So this is a duty of a tax auditor to identify whether this company is actually eligible to take the deduction or not, and accordingly report in point number 19 of tax audit report. So a big responsibility has been on the tax auditor to check whether company is actually eligible or not, because there are so many conditions are attached with these deductions basically. So friends, there are two things: amount debited or amount admissible. So whatever amount is lower, that will be allowed as a deduction. Suppose amount debited to P&L is 100 rupees and amount admissible is 80. So in that case, 80 will be deductible amount and admissible amount, basically you can say. and any cost amount cannot be more than amount debited to the P&L account. Basically, we will discuss in detail further. So this 19 number clause has been divided to subsections. So first section cover under section 33AB. When this 19 number clause have very wide impact, there are so many sections. So firstly, we should understand what section says. Then only we can understand what their requirement in tax audit report. So friends, section 33AB is especially applicable to tea, coffee, and rubber business. It is specific deduction applicable to tea, coffee, and rubber business in that there is a requirement to deposit up to 40% of profit. Okay, up to 40% of your profit if you deposited with the NABARD and have some approvals within 6 months, from end of the year or due date of filing return. Basically, in that case, so you will get a deduction. So जो amount आपने deposit किया है, you will get a deduction of that amount basically. So this will be beneficial for this special kind of company. So lower of deposit amount or 40% of profit, it will get a deduction. Okay, whatever amount you have deposited, okay, or 40% of profit, whichever is lower, that amount will be get a deduction under section 33AB, and an auditor is required to report in point number 19 basically. Okay, and similarly there is another section 33ABA which specially talk about the petroleum and natural gas. Similar kind of nature is there. If you deposit such amount in SBI's special account or site restoration account, basically in that case, deposit amount or 20% of profit, whichever is lower, will be allowed as a deduction basically. And this deposit must be done before previous year end, because we have to done before 31st March. If we talk about financial year 24-25, then it should be done before 31st March 2025 basically. So this is for a special kind of petroleum and natural gas companies basically. And if I talk about, there is another very good section, section 35. This is a very important section because here we get a deduction for the scientific research development basically. If we contribute any amount towards the scientific research, whether we do such research in-house, whether we paid amount to some another institute, in that case we get a deduction. So this is further divided into 5 parts basically. First part it talk about, when as you can see the point number 19 in my screenshot. This is a screenshot taken from tax audit report. Here you can see, firstly we need to select section, then we put the amount debited to P&L amount, then we put administrable amount basically. These 3 things we have to do in point number 19. Okay, although friend, reporting part is very small, but working part is too large for this point, clause number 19. So friend, in 35 family there are 5 clauses basically. 35 1 subclause 1 basically, which talk about in-house research. If any company do any research and development work in-house, in that case whatever amount they have expended, okay, that is also allowed a deduction. So you can see revenue expenditure on business related scientific research, pre-commencement cost allowed within 3-year window. So in next 3 years that is allowed. If I talk about to payment to institution, if you're not doing such research in-house, you are making some payment to another institution, those have specialization in this, and they are registered with income tax department as well. So contribution to approved research association, universities for scientific or social science research. So whatever amount you will pay, you will get a 100% deduction of that basically. And there is another 35(1) subclause 2A, which talk about Indian company payment. Amount paid to registered Indian R&D company approved by prescribed authority. कोई specific authority से approval है आपके पास, then you making payment to that company. Suppose there is a ABC company which is prescribed by income tax department and you have such kind of approvals. So a company make whatever payment to that is also allowed under deduction part basically. And fourth one is capital expenditure, which is covered under 35(1)(4). Capital investment in research excluding land. No depreciation allowed on this asset. So whatever amount you expended on capital expenditure other than land, that is also allowed as towards the research and development basically. So that is also allowed as a deduction. And fifth part is 35(2AA) 2AB, advanced R&D. Payment to national lab, IITs, biotech, and manufacturing in-house facilities. So if government approve these institutions, to whom if we paid amount of contribution, that time we get the deduction. So section 35 has been divided into these 5 parts basically. Oh friends, I am clear with this. And further, friends, section 35, if you see, it is further divided because section 35 has a long family of deductions. So another four important point based upon some specified skill set they have added, like spectrum. If any, it is applicable only to telecom companies. If any telecom operators acquire any spectrum uses right, in that case, they are eligible for the deduction. So whatever is the life of the license, based upon that, they will allocate the amortize the value in the life of the license. So the amount they amortize, they will get deduction basically. Similarly, section 35 AD, which talk about specified business, which is also notified by income tax department, capital expenditure for specified business category. That is 100% in a year incurred or at the operation commencement basically. If you made any kind of capital expenditure for a specified business category which is approved by income tax department, in that case you will also get the deduction. Another is for the agriculture extension. Board notify agriculture extension. Here board means CBDT, Central Board of Direct Taxes, notify agriculture extension project as per prescribed guidelines. So in that, if you made any expenditure, that is also allowed as a deduction. 100% deduction is allowed basically, except land and building. In 35 triple C, land and building are not allowed. Only other than land and building, capital expenditure are allowed basically. And if we talk about 35 CCD, skill development, company expenditure on board notify skill reduction initiative. That means कि कंपनी मेकिंग एनी एक्सपेंडिचर ऑन बोर्ड जो सीबीटी नोटिफाई करेगा फॉर स्किल डेवलपमेंट, नेशनल स्किल डेवलपमेंट लिमिटेड, कोई भी मतलब स्किल से रिलेटेड डेवलपमेंट होनी है उसके रिगार्डिंग अगर गवर्नमेंट ने नोटिफाई कर रखा है, फिर इनकम टैक्स डिपार्टमेंट ने उसको नोटिफाई कर रखा है, उसके अंदर कोई हम एक्सपेंडिचर करते हैं अदर देन लैंड बिल्डिंग, वो भी हमें अलाउड हो जाता है 35 सीसीडी के अंदर फ्रेंड्स. तो 35 की फ्रेंड देयर लार्ज फैमिली ऑफ 35 डी बेसिकली. अनदर 35 डी में कवर होता है फ्रेंड प्रीमियरली एक्सपेंडिचर्स, जो हम लोग कॉमनली डील करते हैं प्रीमियरली एक्सपेंडिचर को. सो इन प्रीमियरली एक्सपेंडिचर फ्रेंड प्री कमेंसमेंट कॉस्ट, मतलब कोई भी बिजनेस को स्टार्ट करने से पहले की जो उसकी कॉस्ट है, उसका कोई बिजनेस आप एक्सपेंशन कर रहे हैं, कोई नई यूनिट सेटअप कर रहे हैं बेसिकली, तो उसमें इंडियन कंपनी एंड रेजिडेंट पर्सन होना चाहिए बेसिकली. तो उस केस में आपको उसकी रिडक्शन हमें अलाउ करते हैं 5 ईयर्स के अंदर. जब 5 ईयर्स में जो भी हमने एक्सपेंडिचर प्रीमियरली एक्सपेंस का करा है, वो अगले 5 साल के अंदर हम उसको 20% करके उसको अगले 5 साल तक उसकी रिडक्शन अलाउ करते हैं सेक्शन 35 डी के अंदर बेसिकली. ये बहुत कॉमन सेक्शन है विच जनरली वी यूज. Okay, and 35 DDA, voluntary retirement, employee VRS scheme payment, 1/5 annually over 5 years. Whatever amount you have paid to employee as a voluntary retirement, basically, in that case, you also get a deduction the 35 DDA. Okay, so that is also allowed in the life of 5 years, basically. Another one is 35 DD, which talk about amalgamation and demerger, restructuring expense for Indian company, cost wholly for merger transaction. इसमें इसमें फ्रेंड वटेवर अगर आप कोई भी रिस्ट्रक्चरिंग कर रहे हैं, अमलगामेशन कर रहे हैं, मर्जर कर रहे हैं बेसिकली, तो उसमें जो भी एक्सपेंडिचर हो रहा है इंडियन कंपनी को रिस्ट्रक्चरिंग का, तो उसकी जो कॉस्ट है बेसिकली वो आपको 35 डीडी के अंदर एज एन डिडक्शन आपको अलाउ की जाती है बेसिकली. तो ये भी एक स्पेशल काइंड ऑफ डिडक्शन है आपकी. अपार्ट फ्रॉम दैट फ्रेंड 35E मिनरल प्रोस्पेक्टिंग, एक्सप्लोरेशन एंड एक्सट्रैक्शन ऑपरेशन वन. अगर आप मिनरल्स के एक्सप्लोरेशन एक्सट्रैक्शन के अंदर इन्वॉल्व है आपकी कंपनी, तो 1/10 ऑफ द एलिजिबल एक्सपेंडिचर एनुअली, जो भी उसका खर्चा इंकर हुआ है वो अगले 10 साल के अंदर आपको 1/10 की फॉर्म में एज ए डिडक्शन आपको 35E के अंदर आपको अलाउ हो जाएगा फ्रेंड्स. यहाँ पे फ्रेंड एक इंपॉर्टेंट पॉइंट है हमारा कंप्लायंस करने वाला, वो क्या है कि ऑल डिडक्शन रिक्वायर प्रिसाइज डॉक्यूमेंटेशन showing amount debited to P&L versus administration amount under each specific section. Maintain comprehensive record for audit verification. When, as I told you, clause number 19 having only required 3 kind of things: section, amount debited to P&L, and allowable deduction. But it is easy to say these 3 information, but to have working of this, we all to have maintained last document basically. We have lots of conditions whether we are the assessee is complying those conditions or not. We, as in tax auditor, we are required to check that also basically. So therefore, we have a proper document with us when we are allowing such deductions here. Okay. And friend, in this also, there is a understanding deemed profit under tax code. For further, friend, exploring section 35 AC, 32 AC, 32 AD, 35, 33 AB, 33 ABA, and 33 AC, when investment incentive become taxable income. इसमें क्या है फ्रेंड, जैसे आपको पहले बताया मैंने कि जो भी हम whatever expenditure we will incur, based upon that we will get the deduction. There is some section in which we have to make investment for future. For that also we get a deduction basically. So if you see investment, like section 32 AC, company engage in manufacturing or production basically. In that 50% of deduction of investment, okay, greater than 100 crores in new plant and machinery for financial year 2013 to 15 basically. Now, in that case, when whatever amount we have incurred for this special kind of business, that case the deduction is allowed basically in 5 years. Okay. एंड इसमें ट्रिगर पॉइंट क्या है फ्रेंड आपका, एसेट ट्रांसफर क्रिएट डीम इनकम बियॉन्ड कैपिटल गेन इन 5 years basically. Another section is 35AD, which also talk about 50% deduction of manufacturing setup in notified backward area financial year 2015 to 20. This 5 year deduction is allowed. Whatever expenditure you will made, of 50% of that expenditure you get a deduction. So you are getting additional deduction. Whatever amount you debited to P&L, that is also allowed. But over and above, 15% amount will be allowed as a deduction in 32 AD. And its trigger point is non-compliance within holding period requirement is 5 years basically. These provision ended for new claim for assessment year 18-19 onwards. So friend, this is not applicable for current year. This is for past years basically. But here friend, जिनके 5 साल या 10 साल कंप्लीट नहीं हुए वो वाले क्लेम्स हमारे करंट ईयर में आ रहे होंगे, बट कोई भी फ्रेश बिजनेस के क्लेम्स इन सेक्शंस के अंदर अभी नहीं आ रहे होंगे आपके बेसिकली. ओके. एंड फ्रेंड्स, इफ आई टॉक अबाउट 33AB, ठीक है, टी कॉफी रबर डेवलपमेंट आपसे डिस्कस किया फ्रेंड मैंने आपको ऑलरेडी. डिडक्शन फॉर अमाउंट डिपॉजिटेड, डीम इंकर ऑन इम्प्रॉपर विड्रॉल बेसिकली. ओके. 33ABA साइड रिस्टोरेशन आपका. 33AB टॉक अबाउट साइड रिस्टोरेशन, डिडक्शन फॉर रिस्टोरेशन रिजर्व. आप कोई रिजर्व क्रिएट करते हैं उसके रिगार्डिंग आपको डिडक्शन दी जाएगी. विड्रॉल फॉर अनऑथराइज पर्पस ट्रिगर इनकम and interest credited also subject to verification basically. Okay. And another very important section is 33AC, shipping business reserve. इसमें क्या है फ्रेंड्स, जो शिपिंग कंपनीज है, दे जनरली हैव टू मेंटेन ए रिजर्व बिकॉज समहाउ शिपिंग कॉस्ट आर टू मच to buy a ship. So for that purpose, they are required to maintain a shipping reserve. For that also, shipping reserve created before 31st March 2004 must be utilized per specified terms. Non-compliance create deemed business income. तो ऑलमोस्ट फ्रेंड अब इसका सिग्निफिकेंस खत्म हो चुका है, बिकॉज जो भी आपने रिजर्व पहले बनाए थे आपने 31st मार्च 2004 से बिफोर, दैट इज अलाउड एज डिडक्शन. अब वो रिजर्व फर्दर नहीं रिक्वायरमेंट है बनाने की. तो कुछ ऐसे सेक्शंस हैं जिनकी प्रैक्टिकलिटी हैज बीन स्टॉप्ड, बट दे आर स्टिल पार्ट ऑफ द टैक्स ऑडिट रिपोर्ट बेसिकली. ओके. And then there is another clause. Now clause number 19 has been complete. Now we are moving to clause number 24. So friend, whatever deduction we have provided in clause number 19, now time has come to check as a tax auditor whether such condition in future is also complied or not. Suppose there is some conditions that we need to deposit and that deposit should be continued with 5 years. And later on, if they are premature, yeah, it is withdraw before 5 years. In that case, that amount become taxable because you already taken deduction in point number 19 in earlier years. For that, clause number 24 is there. 24 signifies that ki whatever deduction you have already claimed in section 32AC, 32AD, 33AB, 33AC, and 33ABA. So in these 5 sections, whatever deduction you are already claimed, okay, and you have not complied with some condition specified with such section, then it is duty of tax auditor to check whether such condition are complied or not. If such condition are not complied, in that case, in clause number 24, he has to select the section on which section condition not comply, need to put the description also कि क्या condition है which is not fulfilled, then put the amount. As soon as we put any amount in clause number 24, it will automatically go to your income tax return and become part of disallowance. Suppose a tax auditor has correctly report something in clause number 24, but SIC while filing ITR not disallowed such amount basically, not offer such amount for tax purpose. In that case, the intimation under section 143 1A will come because it is considered as a arithmetical error. Ki something is reported in tax audit report, but you are not corresponding amount is not offered for tax in ITR. In that case, intimation under section 143 1A will come and tax has been computed on such disallowance basically. Hope friends, I am clear with this clause number 24 because whatever we have understand in 19, so we have to study clause number 24 in line with 19 clause basically. So if I have divided this clause number 24 into 4 parts. First, confirm condition for original deduction were met. Ki whatever original deduction in point number 19 in earlier we got whether uh, the condition are met or not. Second, track asset status, monitor transfer, disposal, utilization pattern. So whatever condition is with that particular deduction, we need to monitor. Okay. Calculate deemed income, quantify amount triggered by non-compliance event. If suppose in 5 years we need to get a deduction, up to 3 years we are complying with the condition. In next fourth year we are not compliant. So only amount eligible for fourth year as deduction we have obtained in past, that is become the income in clause number 24. So that is also need to calculate by the tax auditor. Report in clause number 24. Disclose all deemed profit under applicable sections. As I told you, so in these 5 sections, whatever is applicable, so then we need to select it and offer for tax in clause number 24. Okay. Now moving further, friends. Another clause, very important clause, very practical clause. Friend, next two clause belong to those company, those who are dealing with the internationally basically. Okay. First point we are dealing with 30A, then we'll discuss 30B also. Okay. In 30D is our basically primary and secondary adjustment comes basically. Important thing is here, friends, if your transaction value is more than 1 crore rupees for both the section, both the clause 30A and 30B. If your transaction value is more than 1 crore rupees, then only these two sections are applicable. Otherwise, these two sections are not applicable. For small companies, even they are doing some transaction with the outside international companies, they have holding company outside India, kind of. If even is doing transaction with them, then also these two clause are not applicable if transaction value is less than 1 crore basically. Let's understand these two important things, friends, because these are very important clause. Mainly these are dealing with under transfer pricing. Okay. Those who have basic understanding of transfer pricing, they can better correlate these two clauses basically. So first we are talking about 30A, which is telling about in 38 talk about increase taxable income or reduce losses in India in aligned transaction value with arm length price. So friend, in what happen in transfer pricing, if anything is not done as an arm length price, so the balance amount need to be adjusted in your income tax return, and accordingly, a tax auditor is also required to report such thing in clause number 30A. Okay. It- there is a chance that tax SIC will not report the same in ITR. So the duty has been assigned to the tax auditor. They will put the thing in clause number 30A so that income tax department can trace it very easily. So friend, when clause number 30A will trigger, taxpayers voluntary adjustment in return, उसको voluntary को adjustment करनी है. Assessing officer adjustment accepted. So if any adjustment is offered by assessing officer and which is accepted, that is also required to report in 30A. Advanced pricing agreement after there is any APA post April 2017. Okay, because APA has come into the picture only April 2017. Is there any advanced pricing agreement? For that, there is any transaction you need to report. Another is safe harbor rule adjustment. And third one is MAP, mutual agreement procedure under tax treaty. If there is any kind of treatment required for this, that time we need to do basically. Okay. And another is, friends, there is two important thing, friend. No reporting needed for assessment year 16, 17 or earlier, because as per income tax, this clause has been introduced in 16, 17 only. So therefore, before that adjustment are not required. After that, adjustment is required basically. Second thing, if there is secondary adjustment, note required if amount is less than 1 crore. I already told you, friends, if transaction value is less than 1 crore rupees, in that case, it is not required to report 30A. Similarly, in 30B also, when we discuss 94B, also limit is 1 crore. Okay. And clause number 30A, ensure proper disclosure of transfer pricing adjustment, repartition status, and any other applicable interest or tax payment. When this clause number 30A is very beautifully drafted, in that three important things has been done. First part, if any increase in income through arm length price, that is need to report. Second, if any excess amount has been transferred outside India, that is also required to get back to India within a specified time frame. We discuss the time frame, and it is getting late, then there is an interest provision also. If we need to get interest over that basically. Fourth one is, if anyhow the amount is not possible to get back into India, then a flat rate of 18% we can pay tax to government, and then amount is not required to get back to India basically, friends. Okay. So you can see here, as I told you, repartition mandatory. So due to any secondary adjustment, we have paid any excess fund to with foreign associate. Then why this clause are there, I will let you know, friends. What is happening? There are so many foreign company, those who having their subsidiary and associate enterprises in India basically. So they are doing whatever business they are doing in India to book loss in India. They are taking fund outside India basically. In the name of management services and other services, they are taking fund outside India so that they can book losses in India basically. To control that, transfer pricing has been implemented. So if any transaction with their associate enterprises, okay, which is not as per arm length price and not as per market value, that difference is required to be paid tax in India basically. Okay. So whatever extra amount you have paid outside India, हमने 30A क्लोज के अंदर ऑलरेडी उस वाले जो एक्स्ट्रा अमाउंट पे करा है जो अलाउड नहीं है, उस पर टैक्स पे करा. सेकंड, whatever amount we paid outside India extra, that is also need to get back to India. So this section also require excess fund with foreign associate enterprise must be brought back to India within 90 days. And rule number 10 CB is applicable there. And if it not come within 90 days, then there is a requirement for getting interest also. If transaction is done in INR, then it is for SBI 1 year MCLR plus 3.25% rate, and foreign currency in case of foreign currency 6-month LIBOR plus 3%. Now alternative references basically. Okay. And third important thing is alternative additional tax option. Government given alternative additional tax option in case you are not able to get back such fund which you pay excess to foreign associate. In that case, pay 18% additional income tax plus surcharge plus cess. No repatriation required. No interest calculation needed. Tax is final and not deductible basically. Okay. So if you paid this amount, you will not require to get back some from government, get a tax over that thing basically. Hope friend it is clear to all of you. Now moving further, friends, auditor reporting requirement basically. Tax auditor must verify and report primarily adjustment detail under clause number 30A. Adjustment classification, identify the specific clause under which 92 CE one that triggered the adjustment. I told you there are 5 trigger points basically. So whatever point is triggered, you need to identify. Quantum of adjustment, uska amount kitna hai basically. Report the exact amount of primarily adjustment made. Repartition status, say whether excess amount paid to foreign associate, whether get back or not, that you need to confirm whether repartition is required and if completed within specified time limit. And interest calculation, I told you interest computation, calculate interest income on excess fund if repatriation was not completed. Agar 6 month ke andar the amount is not repatriated to India, then you are required to pay interest. So these are liability required to tax auditor to calculate all these 4 points. And friend, it is a screenshot of clause number 30A. Okay. So here you need to select section under which clause, subclause of section 92CE, you are, I'm to trigger point. Then amount of primary adjustment, basically you need to select basically whether the exit amount available with associate enterprise is required to be repatriated in India. Yes or no, you need to reply here. as soon as you reply whether the excess amount has been reparted within the prescribed time, कि within 6 months तो पैसा वापस इंडिया आ गया नहीं आ गया आपका, द अमाउंट ऑफ इम्प्यूटेड इंटरेस्ट ये सब आपको कैलकुलेट करना है, एक्सपेक्टेड डेट ऑफ रिपार्टेशन ऑफ मनी, अगर पैसा नहीं आया है विदिन 6 मंथ का टाइम है आपका, अगर इन दैट केस यू नीड टू पुट अ डेट, जिससे कि नेक्स्ट टाइम जब उसकी असेसमेंट हो या नेक्स्ट टाइम इनकम टैक्स डिपार्टमेंट उसको ट्रेस कर सके कि आपको पैसा कब वापस आना है बेसिकली आपका। और आपकी इफ यू हैव मोर देन वन ट्रांजेक्शन यू कैन ऐड द रो, there is an option for adding, you can add multiple transaction also from here. Okay, now come to the another clause, another very important clause friend, understanding clause 30B, which I talk you is very important and it is not so much old clause, it is also a new clause 30B. Okay, interest expense restructuration under section 90B, मतलब जो भी हम लोग किसी अपनी फॉरेन पार्टी को इंटरेस्ट पे कर रहे हैं, ओके उसको लिमिट करने के लिए 94B को यहाँ पे इंट्रोड्यूस किया गया फ्रेंड्स। इसका पर्पस क्या था इंट्रोड्यूस करने का 94B को फ्रेंड्स यहाँ पे, बिकॉज फ्रेंड बहुत सारी फॉरेन कंपनियां इंडिया में टैक्स रेट ज्यादा है, इंडिया से बाहर टैक्स रेट कम है, उसको बेनिफिट करने के लिए क्या करते थे, इंडिया में लॉस बुक करते थे और वो इनकम बाहर की कंट्री में इनकम दिखाते थे। उस चीज को एट पार करने के 94B को लाया गया। ये कहाँ अप्लीकेबल है फ्रेंड, सबसे पहले ट्रांजेक्शन वैल्यू आपकी 1 करोड़ रुपए की होनी चाहिए, लोन अमाउंट नहीं, गारंटी अमाउंट नहीं, जो इंटरेस्ट पे कराया आपने, ठीक है, जो आप इंटरेस्ट पे कर रहे हैं या फिर कोई कॉर्पोरेट गारंटी मिली उसकी कोई फीस पे कर रहे हैं, ठीक है, चाहे फीस पे कर रहे हैं इंटरेस्ट पे कर रहे हैं सब एक ही पार्ट है आपका, वो अमाउंट 1 करोड़ से ऊपर होना चाहिए। इफ द अमाउंट इज नॉट मोर देन 1 करोड़ देन सेक्शन 94B इज नॉट एप्लीकेबल। वो फ्रेंड इंटेंट यू हैव अंडरस्टैंड ऑफ सेक्शन 94B कि व्हाट इज द एक्चुअल इंटेंट ऑफ दिस सेक्शन बेसिकली। ओके, नाउ गो फर्दर, core purpose restrict excessive interest deduction claimed by Indian company, okay, on the borrowing from foreign company when borrowing from foreign related parties, ki these all apply when interest to non resident associate enterprise exceeding 1 crore annually. It is not applicable if you have taken a loan from or corporate guarantee from any Indian company, then it is not applicable. It is only applicable in case of non-resident. If you have obtained any loan from non-resident or any associate enterprise having outside India, then only it is applicable. Covered entity कौन कौन सी होगी इसके अंदर, Indian company or permanent establishment of foreign company in India. Is there, if there is any P in India of any foreign company, that is also covered under this clause basically. Okay, now friends, how to calculate the disallowance part basically. Okay, the excess interest is computed at the lower of two calculation. These say EBITDA, earning before interest, tax, depreciation, amortization, 30% of EBITDA. Okay, interest exceeding 30% of EBITDA. Okay, interest exceeding 30% of EBITDA, or in the total interest paid or payable to associated enterprise for the year. That mean जो भी आपका EBITDA आया है उसका आपने 30% कैलकुलेट करा आपने, और जितना भी आपने क्या करा है आपने आपने इंटरेस्ट पे करा है अपने फॉरेन एसोसिएट एंटरप्राइज को बेसिकली, उसका आप जो भी लोअर अमाउंट होगा इन दोनों में से, ठीक है, वो आपको अलाउड होगा। सपोज आपका EBITDA है 100 करोड़ का बेसिकली, ओके, उसका 30% आता है आपका 30 करोड़, और आपने इंटरेस्ट पे करा है 40 करोड़ का एसोसिएट एंटरप्राइज को आपने, तो उस केस में आपको जो इंटरेस्ट अलाउ होगा सिर्फ 30 करोड़ का अलाउड होगा, 10 करोड़ की आपकी 94B के अंदर क्या होगा आपका डिसअलाउंस होगा, आपको 10 करोड़ के ऊपर आपकी इनकम में एड बैक कर दिया जाएगा, वो इंटरेस्ट आपको अलाउड नहीं करेंगे। ओके, 10 करोड़ रुपए जो आपका किस फॉर्मूले के हिसाब से लोअर अमाउंट है उतना ही आपको अलाउ करेंगे बेसिकली। बट फ्रेंड यहाँ पे आपके लिए गुड न्यूज है, देयर इज वन गुड न्यूज ऑल्सो। तो वट एवर इन अवर एग्जाम्पल द अमाउंट ऑफ 10 करोड़ रुपीज विल बी कैरी फॉरवर्ड टू फ्यूचर ईयर अप टू 8 years. ओके, सपोज नेक्स्ट ईयर my EBITDA is 100 crore and 30% is 30 crore, and I actually paid interest only 25 crore basically. Okay, in that case whatever lower is 25 comes here कि मैंने 25 पे करा है और 30 की लिमिट है बेसिकली, तो इन दैट केस 25 is allowed. No, in this year you will get a additional deduction of 5 crores more, because maximum you can pay 30% of your EBITDA, that is 30 crore, but you actually pay only 25 crores. So 5 crore rupee, whatever is last year carry forward will be utilized in current year. Till 8 year we can utilize that amount basically. Okay, and we can generally we use this thing in carry forward losses also friend. So it is very common point of understanding. Move further, friends. Some companies are excluded from Section 94B. There are some companies, those are excluded from Section 94B, like banking companies, insurance company, NBFCs, and IFCs, finance corporation operating in international financial service center. Okay, these have recently introduced for assessment year 25-26. First year of IFCs on 94B is not applicable on these companies, basically, friends. Okay, these four companies are excluded for the applicability of Section 94B. So there is no requirement of reporting in clause number 30B. Okay. And now we can see the auditor requirement. Auditor, what is the auditor reporting requirement? Okay. If yes, please furnish the following detail. Amount of expenditure by way of interest or similar nature incurred. These are the extract of clause number 30B, basically, friends. Earning before. So whatever calculation we have done in our presentation, same calculation is required. Same calculation is required. Same calculation is required under clause. So friends, you can see first point is amount of expenditure by way of interest or similar nature. जो भी आपने अमाउंट पे किया है अपनी फॉरेन एसोसिएट एंटरप्राइज को. सेकंड वन इज ईबिटा. ओके, जो आपका ईबिटा है, अर्निंग बिफोर प्रीवियस ईयर इन रुपीज, बेसिकली. अमाउंट ऑफ एक्सपेंडिचर बाय वे ऑफ इंटरेस्ट ऑफ 30%. यहाँ पे जितना 30% आ रहा है पॉइंट नंबर 2 का, वो कैलकुलेट करेंगे हम. Then fourth number point, detail of interest expenditure brought forward as per subsection 4 of 1494B. कुछ अगर ब्रॉड फॉरवर्ड अमाउंट है वो आप बताएंगे इसके अंदर. एंड फिफ्थ में यू विल टेल डिटेल ऑफ इंटरेस्ट एक्सपेंडिचर कैरी फॉरवर्ड एज पर सबसेक्शन रूल 94/24B. करंट ईयर का के बाद एडजस्ट करने के बाद कुछ अमाउंट कैरी फॉरवर्ड हो रहा है आपका, तो पॉइंट नंबर 5 में ये अमाउंट आप बनाएंगे. तो दीज 5 थिंग्स यू आर रिक्वायर्ड टू रिपोर्ट इन क्लॉज नंबर 30B. Oh friends, it is clear to all of you whatever kind of these four clauses are applicable to on what kind of assessees. Okay. For 94B, it is important to understand 3 important things. First thing, if transaction value is less than 1 crore, section 94B and clause number 30B is not applicable. And if transaction is with foreign associate enterprise, then only it is applicable. And third important thing is, if any disallowance in 94B, the amount can be carried forward to future years, then we can use it, basically. So the purpose of income tax department to introduce this clause just to minimize the loss in India, because there is no such limitations, regulations which bound two companies to form any kind of agreement to pay the interest amount, basically. And I told you, friend, it is not applicable to only loan. It is also applicable to corporate guarantees. There is a very common phenomena among the international companies, those who have their PE and subsidiary company in India, they give them corporate guarantees. And in case of corporate guarantees, and for that they charge a huge amount of amount, basically. So that is also applicable to report here, friend. So friends, I think we can move to the questions regarding out of these 4 clauses. If any have any written any question. So from where I can see the questions?
Sir, actually, I would be telling you about the questions. Okay. Right now, there are no questions.
Okay. So I have already completed my all the 4 clauses.
Okay.
These 4 clauses are basically very less applicable cases. If total 65 crores, 65 lakhs tax audit report filed, so you will find these 4 clauses are applicable to only and 1 or 2 lakh, tax audit reports only, basically. So these are very special points in tax audit, basically. Yeah. So
if anyone has any questions about these tax audit points, they can write in the chat box. So there are no questions right now. So you can give your closing remarks if you have.
Okay. So friends, again, I am requesting you, all of you, those who are listening through this platform. So whatever opinion has been taken in tax audit guidance note to refer tax audit guidance note for all kind of discrepancies and views, because I personally feel later on when we have to support our stand, so that time tax audit guidance note is very helpful. Sometime before income tax authority or sometime other authorities as well, we need to justify our stand कि on what basis we have taken this amount on what background are that. So that time supporting document is our tax audit guidance note basically. So that is very paramount important to follow in case of tax audit, friends. So friends, hope you like the today's session, especially for India's and tax audit clauses. I think CP committee is already taking 4 5 clause every day to, so every day yeah uh, मतलब taking clause number
There is
30.
one question
Yeah,
from Mohit Agarwal ji, Kanpur. Is it applicable for royalty cases also?
it is
Is it applicable for royalty cases also?
royalty. You are talking about clause number 30A and 30B. No, 30B is not applicable to royalty cases. Basically, it is only for loan. Okay, loan and corporate guarantees, it is applicable. And if I talk about 30A, it is specifically for uh, royalty are applicable in 30A basically. It is applicable there for 30B. 94B is not applicable on royalty part, but 30A is applicable on royalty. Yeah. If you made any payment which is not as per arm length price, then adjustment is required to do there. Yeah. So friends, I was giving the closing remarks basically. So I already told you, please refer guidance note for each and every clause. So that you have a better understanding, because the guidance note has been developed in so many years. So it is like a Bible for tax audit. First thing. Second thing, friends, hope I cover up your expectations regarding this 4 clause of tax audit. And CP committee is doing very fantastic work by discussing clause by clause with respect to tax audit, so that we all have a very good understanding of tax audit, because this is a peak period of doing tax audit basically. For that, I give my big congratulations to CP committee. And again, thanks to Satish ji, chairman of the CP committee, Vishnu Agarwal ji, Gini Goyal ji, secretary of the committee, and other team member, including coordinator of today, Pribhya Gia ji, for moderating today's session. Thanks to all. Thank you.
Thank you, sir, for such a wonderful session and enlightening us about the tax audit points. Uh, Now, I would like to thank you all the members who have joined the session for listening and having queries regarding the session. I would also like to give a special thank you to CP committees and chairman of the CP committee, Satish Gupta ji, vice chairman Vishnu ji, and secretary Gini Goyal ji for giving me the opportunity. Thank you, members. Now we will be closing the session. Happy Diwali to everyone.
Mhm.
Thank you. Happy
Happy
Diwali,
Diwali
sir.
to everyone. Yeah. Thank you.
Thank you, sir.
Thank you.
Yes, sir. We can close the session.